And we are live. Good morning, crypto warriors, and welcome back to the Gym in the Crypto, episode 745. I just got done saying it's 745 with my Gucci interior. You know what you see when you look in the mirror. All right, today's date is June 22nd, 2021, Tuesday, and I'm King.
And I'm Bitcoin Zay, and we are here to bridge the gap between cryptocurrency and the community Monday through Friday at 10-ish.
At 10-ish. And today's top stories, of course, we got to talk about Bitcoin dropping below the 30K mark to 6-month lows. Watch the next price support levels. CNBC host boldly reveals he sold his Bitcoin amid depths of bear market. And Bitfarms shares slump on NASDAQ debut amid crypto market pullback. But first and foremost, what's going on with those prices?
Oh, yeah. So taking a look at our prices for today, Bitcoin, as we said before, dumping below 30,000 at $29,210, down 11.5%. Ethereum at $1,721, down 14.2%. Binance Coin at $231 is down 25%. Cardano at $1.02 is down 23%. XRP at 51 cents is down 24.4%. Dogecoin at 16 cents is down 27%. Woo.
Give me all that. Give me all that right back.
Hey, man. Hey, after Elon went on SNL, everybody got dumped on bad. Polkadot at 13.28 is down 26.2%. And last but not least, at number 10, Binance USD, jumping into there as a stable coin, but Uniswap right after that at 14.22 is down 19.5%. So one of the things we've noticed across the board is that, of course, when Bitcoin goes down 10, 11%, altcoins go down 25, 30% because they're way more volatile, way more speculative. And people always call us a dip. I call it a discount. Like this morning, I even said, King, hey, you seen Bitcoin is on discount? And he was like, it's a what?
Yeah, I didn't. Like, I caught you. I was like, wait, you said it's what? He was like, it's a discount. I was like, good point. Good point.
Nobody sees their favorite item in the store and it says, oh man, it's 30% off. Man, that sucks. It's cheaper now. No, it's if you believe in Bitcoin, believe in whatever project, it's on sale today. It's a fire sale. This is like March of last year when COVID happened. This is Max Payne. If people want to know what Max Payne is, you'll learn in the masterclass. Max Payne is what whales do to make sure they clear out all the people who are being facetious and doing 20 and 50x leverage. They're going to dump down as close as they can to 20 something because people are calling for 20K, clear out all the longs, and then they're going to shoot back up past 35, 40, I think, in the next 2 weeks to clear out all the shorters because people are going to short it at the at resistance. So just watch it happen, and then when you take the masterclass, you'll know exactly what I mean when we say Max Payne when it comes to trading.
And that will be out this week, folks. Don't worry. We're going to be promoting for it heavy here very shortly. But it is going to be out this week. Oh, and today's show is actually for Reggie Middleton. He's about to actually log on right now. Really quick, only the real estate. Thank you for the tip. I'm going ahead and let Reggie in now. We're going to get this show rolling without further ado. So might take a minute for him to, of course, get the audio going, but we are excited to have him on. But yeah, quick shout outs going on Kadeem and Neuro, BK, keep on taking bits. What's up, Carmelo? Sarita, Addy, P-Man Van, Raquando, Goodness, Nathan, Seawill. Yes, got that crispy white shirt on today, right? Let's see. What's up, Milto? Say, hey, guys, rough day so far. Time to add. What's up, Milto? Shout out to you. Hopefully the day gets better. Last Square, New Jersey in the house. There we go. All right. We had Reggie on. I think we just lost him. So hopefully we get him back. Are you, Reggie, are you there?
I'm here.
Oh, boom. We do have them. So without further ado, let me give a proper introduction. Folks, we have patented founder of DeFi, predicted many market crashes, disruptor-in-chief from boombustblog.com, Veritaseum founder, enabler of peer-to-peer capital markets and self-sovereign finance, none other than Reggie Middleton. Thank you for being on the show.
Should hire you guys for some PR.
No, I told you we've been following your work for a very long time, so this is a long awaited interview for sure.
Oh yeah.
Actually, and of course, first question we have to ask you, we always ask everyone here, you got to give us a short version, tell you your story. How did you get into crypto?
1 second, let me get this camera tight because it's
all good. No problem.
Yeah, I have an ill family member and it's caused a little disruption in the life. So pardon my tardiness and lack of preparation here.
Oh yeah. For those who are listening again, this is Reggie Middleton, founder of Veritaseum. Back in 2017, when the ICO launched, one of the top ICOs out there, we actually covered it when it happened on our channel. So if you want to go up to best altcoins we buy, Bitcoin Zay already brought it up. Go ahead and let it run, Bitcoin Zay.
I say if you wanna go back to August 2017,
and they were doing it. So they actually just partnered with Jamaican Stock Exchange to build a digital assets platform. So that way people can transfer.
So yeah, you get the point. We were talking about Veritaseum back in 2017. So we have a long history talking about Reggie. Actually met Reggie at the Black Blockchain Summit in 2018. So yeah, go way back. Glad to have you on, brother.
Okay, but feelings mutual and much obliged.
Yeah,
Okay,
so Reggie.
Go ahead.
Yeah, of course. Like I said, top question today, how did you get into crypto? What roads led you there? Like that's everyone always wants to know that, just to give you a background, because of, everyone's way of coming has been so different. People were computer scientists, people were plumbers, and then everyone ended up in the same spot somehow. So what's your story to bring you into the community?
Okay, well, I was a self-directed investor. I invested my own capital. I had my own team of analysts. I'm not very big on sell-side Wall Street in terms of actual production of organic returns. That's a polite way. I'm trying to be polite, way of saying it. And so since from 2007 to about 2013-ish, I looked at balance sheets, looked at macro trends. I do macro, I do up and down. So I saw a big bubble forming, which I rode the bubble up by buying real estate in the New York area, mostly downtown Brooklyn, Fort Greene, et cetera. Did very, very well. And when it got to the point where 2 + 2 started to equal 114, even moi, who's not that good in math, said there's something wrong here. So I started shorting it, and I started selling it off. And at the same time, I said I wanted to create a hedge fund to take advantage of that 22 times leverage that the hedge funds were getting, because I was going to write it down because it was obvious it's going to fall. It's just a matter of when. The timing was right. 6 months after I sold my last saleable, non-litigation property, the market fell out in New York, and I shorted Bear Stearns, Lehman Brothers, Washington Mutual, et cetera. About 86 companies, all in all. I turned bearish on the European sovereign debt market. Almost all the builders, a lot of the banks, like I said, and I called them very explicit reports. I released a lot of the stuff for free. Like Bear Stearns had a 36-page report. If you go through it now on Boombust's blog, not only is it extremely detailed, it's quite prescient, Lehman, et cetera. So after doing all that, the government and the Fed decided to reflate the market, and it was very difficult to reflate it from a fundamental perspective. So they just changed the rules. They changed the accounting rules. So broke didn't mean broke anymore. Underwater didn't mean underwater. And they started printing money like, turbocharged HP factory.
It was 2021 all over again.
Right. No, so there's a pretty big difference. You'll get to that if you want to discuss it later. The biggest difference is, think of 2009 when they started reflating the market. And I lost actually 40% of the gains because I said, I knew there was going to be a bounce, but I'm like, how bad can it be? I mean, they can only print for so much money. Mistake number one, right? Think of that as nursery school. No, because it was rough. Think of that as like 3rd or 4th grade. Okay. 2021 is like you're on your 5th PhD and working. 2021, 2020 has been unprecedented in the history of this country, including practically every war that we've had, including the Civil War, where the term decimate came from because we really killed 10% of the male population. A lot of people are not putting this in perspective, but significant changes occurred. I'm in my backyard, so let's go on.
Oh, no problem.
Okay. So basically, that's somebody who loaded up in the US dollar. They got to bring them to the hospital.
Yeah, gotta take the fiat people to the.
Okay. So, can you hear me?
Yeah, we can hear you.
Okay. So, that reflation trade, sort of put me out of business. And most of my clients, and I had a paid blog. I think at the time it was mostly Nuril Beanie and I had a paid blog. People paid good money for the analysis, up to about $3,000, $4,000 a year. Those are mostly institutions, high net worth. But when they changed the rules and started printing money, you didn't need stock pickers anymore because all stocks just went up. As a matter of fact, the worse off the stock was, the faster and higher it went up. 2021 similarity, okay? During this time, since 2011, one or two of my clients were asking me to look into Bitcoin. And I was like, I don't have time to look into Bitcoin. I'm trying to, look into something that's going to make some money, okay, or short something. After 2 years of incessant asking, I decided to look into it. I didn't really trust much of the media to convey unbiased fact. So I went to the Bitcoin white people and the Bitcoin wiki. The Bitcoin wiki caused my jaw to hit the ground. Most people, when they looked at Bitcoin, they thought of remittance of money or trading a currency or sending little pieces back and forth. And the thing that caught my eye was Bitcoin script, programmable money, and monetary rails all in one system, and smart contracts. I'm like, this is Nirvana plus. And I'm looking around like, this can't be real. So I actually called Michael Hearn, one of the early Bitcoin developers that actually took advantage of the programmability that I knew of. He said, yeah, it's real, but it's in beta form. So it's not really real. But I said, you have working code snippets out. We took them, we put them together, we made things work. He says, yeah, but it's early. And so after, I'd say we started in June, I started getting serious in October. So between June and October, I dropped the advisory business and went full force, head on into the Bitcoin business. Okay. What we did was I took the ISDA agreement, which is the International Swap Dealers Association agreement. That's a boilerplate, but 92-page agreement on how to settle a swap and build a swap. And I took everything I had to do with counterparty risk out of it. So it went from 92 pages to about 1.5 pages, 2 pages.
There we go.
We put that on the blockchain via scripting language and smart contracts using Python, Bitcoin script on the Bitcoin blockchain. This is before Ethereum was mentioned, before it was launched, before it was built, everything. About a full year.
What year was this so the viewers understand what you're talking about?
October 2013.
Woo, early.
Okay. Yeah. So if I say that I created DeFi, it's a possibility I could be factually wrong, but from my perspective, I did create it and I was first and I beat many. Those who rely on Ethereum or who rely on Border, R3, etc., they're doing so 4 or 5 years, 2 or 3 years, 2 years minimum before I had the working code out settling swaps. We settled our first swap in December of 2013. I made it public in January or May of 2014 as a public beta where people are actually trading Bitcoin swap application. That application used Bitcoin as a denominating currency, and it used a data feed to shoot in data of up to, I think it was like 20 or 30,000 different assets. Stock, common stock, IBM, Microsoft, Facebook, currencies, commodities, etc. Bonds, bond yields. So basically, you put Bitcoin up, I put Bitcoin up, it goes up to the blockchain, it's locked in escrow, and then the system just monitors the price of, say, Bitcoin versus Facebook stock. Facebook stock goes up more than Bitcoin. The swap, when the swap is ended, whoever had Facebook gets more money, whoever had Bitcoin side gets less money. So that was the first swap, the first DeFi swap. It was DeFi in that you have full control of your private keys during all times, unless it was locked in escrow. And then the blockchain was your counterparty, not the other side. So it was counterparty risk-free to the extent that the blockchain itself is immutable. And we filed patents, 2 patents. They were fairly long and complex patents. Early 2014, they were combined in May of 2014. And that's a priority date, and we filed all over the world. all over much of the world, all the biggest economies.
Well, one thing I do want to say real quick, whether it's you or other people who have been early in crypto, I want to make sure that, hey, if you say, and I agree with you, you have that protocol, that sounds like DeFi to me. That's why I read it out the way I saw it on your biography as well, because right now, I'm sure you know this, in early crypto, people weren't staking claim to things. You are building so much in so many different directions. But now that it's important that people know, yeah, hey, I was one of the early people involved in these type of projects or these protocols that it's been made until this entire ecosystem now, 5 or 6 years later. I think it is important that we point those people out. That's why, again, we were excited to get you on the stream, because you have been in this space for so long. So hearing how you had that initial like Facebook swap to Bitcoin, yeah, that's DeFi. I mean, that's DeFi I've ever heard of it. So shout out to Reggie Middleton for that, for sure.
Hey, Reggie,
let me jump in on that, because for some reason, a lot of people really don't want me to have created anything such as DeFi.
Oh, we got to ask you about that. Yeah.
I'm being called arrogant and full of it and wrong. And I don't see, someone had to have created it. Is it me personally that's the problem? So not only did we create it, but you have to understand, I came from a different background from most of the crypto entrepreneurs. I'm a finance guy, right? And I'm a technologist, but I'm not a developer or engineer. And as a finance guy, I'm very well versed in terms of valuation and macro things, but I was never on Southside Wall Street. Okay, so I didn't belong to any club. I was the unwanted child, but in not belonging, I'm able to see things from a very realistic perspective. Okay, so with all that being said, as we file for the patent applications, they're starting to be issued now. So from an IP perspective, I own a significant amount of the DeFi space. As of right now, we've been going through a lot of companies. I have a team of analysts who do this full time. I haven't come across anybody who hasn't infringed. So the list of who didn't infringe is much smaller than the list who did infringe or will infringe. Okay, now I'm not a patent troll either, so we're still investigating, what will be done. But as you may or may not know, the enforcement arm of certain U.S. government agencies also doesn't seem to believe me either. So we've had a significant issue with selling of the name and the brand, and been decapitalized. But we're rising back in 2021, and we're rising back potentially, actually, most likely stronger than ever, especially from an IP perspective.
Nice. Bitcoin Zay, what'd you have? I saw you starting to say something.
Yeah, and I just wanted you to make sure that people listening got the point that you said earlier. Bitcoin had both smart contracts and DeFi, as you created it, before Ethereum, correct?
Correct.
Okay, because I just wanted to make sure you said that, because whenever we tell people that, a lot of times on the show, they're looking at us like, what do you mean? Ethereum invented DeFi. It's like, no, you weren't here in 2013 like I was, and you were, and other people. Yeah. It was people that did it before. It's just the popularity is something else. Like we always say, the value of it is different than the price. The value of it was valuable. The price was later. Yeah.
That's like saying Ford invented driving. Ethereum is a platform. Ethereum is what Bitcoin would have been if Bitcoin didn't have its political infighting. Okay. What Bitcoin needed was the ability to be more aggressive with development, but also B, a full Turing scripting language, which it didn't have. It had a simple scripting language, Bitcoin script. Full Turing means basically you can get it to do more things versus very simple things, such as non-Turing. And that's it. Ethereum is much more closely held in terms of decision making. And so they get decisions made faster, and they moved faster. They broke things more often, but they also fixed things much more often. So that's the difference in development. DeFi is a concept of doing business, basically decentralizing. What I really created was DeFi, D-I-F-I, distributed finance. Decentralized finance is we take it from one center and you move it to 2 or more centers. If you're going to distribute it, that means you move it to many, many, many centers. And that makes it much more capable and much more powerful than actual decentralized finance and centralized finance. But there's a way, there's a pluses and minuses to it, because centralized finance will probably be faster and move develop much more quickly, with all things remaining the same. But in reality, all things don't remain the same. So.
No, I do like that distributed finance. That actually makes a lot of sense when you said it. I was just like, woo, we got one of the jewels early, first 15 minutes, we got one. Distributed finance. Actually, I think that sounds like a hybrid of both the systems. And you're right, that might be what the bankers would settle for and what everyone else is looking for in terms of mitigating risk. So we'll see. I like that. Yeah, distributed finance. There we go. And of course, folks, we are going to be asking about your projects. Some people are saying they're still holding your project's tokens. We're going to get into that. But first, I want to ask you about a couple of the top stories of the day, because these are the stories that usually moves the markets, have people worried Bitcoin's going to die. And of course, today's FUD piece, Bitcoin drops below 30K to 6-month lows for the first time, as they said, in the last 6 months. Downward selling pressure sees Bitcoin swiftly take out $30,000 support as Binance users report technical difficulties. I've been telling people as of late, Binance has been acting crazy. So if you have your money on there, make sure you move your money off. But again, Reggie, what are your thoughts on this? Bitcoins, they started to show off saying, hey, this is a discount. No need to fear. This is a good time to keep buying. In general, what are your thoughts on Bitcoin? What are your sentiments on Bitcoin? And what are your thoughts on this price dip?
Okay. Well, I'm a contrarian, so chances are, if you ask me that question, there's a 90% chance you're going to hear something you don't want me to say. Okay. So, caveat emptor. Okay. Well, first of all, when you said, don't leave your money on Binance, you can leave your money on Binance, but don't leave any of your crypto on Binance, because if you do, you're being, it makes no sense. The whole purpose of getting in crypto, what I've wanted to build was a self-sovereign financial system. Okay. That's what gets me in trouble, because financial systems want to be sovereign by the powers that control the financial system. Those who understand how finance works want the exact opposite. They want a self-sovereign system. So just to define what I'm talking about, sovereign is a controller, a ruler, the person or the entity in charge. Self-sovereign means you're the king, you're the ruler, you're the person in charge of your own stuff. Okay, so if you're in charge of your own, you're taking power from the greater system. Okay, that's controlled by one entity, a dictator, or a small group of entities, such as a monarchy or oligarchy, or a democratic government, which I'm not going to get into that, but a lot of people, don't agree with that, the concept in general. So there's this push-pull here, but you win on the pull part when you're able to control your own financial freedom or financial destiny, in terms of Bitcoin or Ethereum or anything that has a private key that allows you to have sole control of your assets. So when you go to an exchange or a digital bank, okay, and you send your assets to them, and then they control the private keys that control the assets, you stripped every advantage of having crypto from yourself. So what's the purpose of having control of crypto when you pass the crypto and the control to a third party, and a third party who is not you and does not necessarily have your best interest at heart? I'm not saying that Binance is bad, but Binance is not you. Nobody loves Reggie Middleton as much as Reggie Middleton does. Okay, nobody should love King as much as King does. Arguably maybe your, wife, children, etc. But you understand the point. So what centralized exchanges do is they incentivize you to give up control, safety, ownership of your assets. And they are the largest aggregator of assets right now, which is why the DEX and the DeFi exchange movement is growing so fast. The CEO of Binance is no fool. He grew that from zero to a multi-billion dollars very quickly, as did a lot of his competitors, such as BitMEX, Arthur, etc. So what he's doing is he's creating a decentralized arm to compete with his own centralized arm, because he sees that eventually, the centralized model is going to fall to the wayside. Until that happens, and until it happens properly, you only use centralized exchange if you're smart to convert. Use it as a gateway. It's very difficult to go from government fiat money to crypto money. Okay, it's possible, but it's difficult. And it's even more difficult to do it on a trustworthy basis. So that's what I would use a centralized exchange for. Once you've done your trade, take it right off and put it in the bank that it belongs in. And that's the Bank of King. Okay. So that's my take on whether you should put money on and off Binance. It shouldn't be there in the first place. They're a utility to convert. You don't live in your doorway. You use the doorway to get in and out of your house.
Ooh,
Okay.
beautiful.
So once you get in and out, you leave the doorway, or you can sit there, put a stove right in the doorway, a couple of toilets, set up camp. That's my cocky, corny analogy. As for Bitcoin is what got me into crypto. I told the story of me going from, I was in a traditional finance world, but I was a contrarian, so I was still a non-traditionalist. I would go short just as easy as I go long. I'm looking for value, whether something's overvalued or undervalued, income, etc. That's what got me into Bitcoin, because Bitcoin enabled this to go to the next level. That was 2013. And I was a heavy proponent in 2013 and 2014 until the political infighting started slowing Bitcoin's development down. Okay. And Vitalik Buterin and Joseph Lubin and that crew got together and proposed, I think Vitalik might have done on his own, proposed to the Bitcoin developers, hey, you should put a full Turing scripting language in, right? And we should expand the capabilities. I agree with that, right? And I was new to Bitcoin, the community at this time. A lot of community knew me because they followed Zero Hedge and Max Kaiser, where I was a prolific contributor. But I didn't know them, and I didn't know the politics at the time in this community. So the Bitcoin developers said no. And then that's when Vitalik got with, I'm assuming he got with Joe and everybody else. They created a very interesting, construct, raised capital, and they did their own version of Bitcoin. The way I believe Satoshi intended it to be. Okay, Bitcoin is no longer peer-to-peer internet money. Bitcoin is now a speculation engine. Okay, take a look at where most of the activity is. Take a look at where most of the attention is, the development, and it's in speculation, and it's not in actual fundamentally moving value from one place to another, conditioned upon a data source or a condition or something else. That's what Ethereum has become. And because of that, Ethereum has grown significantly in terms of use, utility, and price appreciation. But price appreciation doesn't tell the whole story, and we'll probably get to a little later. I would think price appreciation almost tells none of the story, because those entities that drive the price up either don't care or don't know how to fundamentally value the system that they're dabbling in. They're simply looking for more money, Pumpamentals, as a term that I've heard not too long ago. Okay. And that's it on Bitcoin. So It's not a like, hate, love, hate. It's not a like, dislike. It is what it is. I see a bunch of facts. I look at the facts. I write them down. I analyze them. The only thing I like is, my family, my friends, and I. So I don't fall in love with, code snippets and tokens and blockchains and servers. Doesn't work for me, making love with databases,
I said the same thing on our show yesterday. I was like, look, I don't fall in love with different projects. Like, I'm looking at the numbers. I'm looking at, even from the speculative point of view, do they have a community that's going just crazy or irrational? But I'm not falling in love with the underlying project itself. It's like, hey, if it works, then it works. If it has value, it has value. If it does not, it is time to keep it pushing. Too many people fall in love with projects, I feel like.
Yeah, the circle jerk on Twitter is ridiculous. Everybody loves each other's project and wants to agree on everything. I hate it. We need more marketplace of ideas.
Yeah. Track, what's going on, PFC Will? Say I wasn't paying attention to the clickism back then, but know what I know now. He's speaking facts about the politics of the space. I mean, the best version of seeing the politics of this space go down in full sight of everyone is 2017 Segwit 2X, people. For those who are around there, if you want to go back and look into some of the things that was happening around Segwit 2X, I mean, you literally had Jahan Wu, one of the largest founders out there for one of the biggest crypto mining companies, telling people F your mom on Twitter. Like, it was just crazy to see billionaires. It was literally billionaires on Twitter like, no, F you right back. Oh, I'll see you when I see you. And it's just like, wait, what is going on right now? This is crazy. So yeah, it is crazy to see. What's going on, Saber? Saber said pulled up to Lemert Park on Saturday, but I didn't see y'all. Hey, we were out there. We were out there for a minute.
Out there for 5 hours, man.
Yeah, we saw a few people who know us from the stream. So yeah, we were out there, but we'll be out there again as well. All right, last but not least, not last, but one quick story I just want to get your thoughts on as well. Again, this is because it's one of those people that everyone follows. CNBC host boldly reveals he sold his Bitcoin amid depths of bear market. CNBC's Jim Cramer has sold off almost all of his Bitcoin holdings, predicting bearish fundamentals will suppress Bitcoin's price for the foreseeable future. To me, this kind of goes along with what you were just saying. When it comes to these, I would say talking figures, popular figures, even the billionaires out there, everyone who seems to have the money who's making the moves in the space, they are not making their moves based off of value. I mean, we talked about recently, Taproot just got activated. Bitcoin is becoming more efficient, and people are actually working on the project. And at the same time, you're seeing the price dip, as Al Salvador says, hey, we're accepting this as legal tender. You're having Jim Cramer come out a week later say, oh, the party's over, folks. I'm selling. What are your thoughts on this one, Reggie?
Well, number one, if your goal is to make money and you sell when Bitcoin went from just about 60,000 down to under 30,000, I think you missed the mark. Okay. just not that I'm a trader or anything. Number two, I used to have this discussion a lot. I don't waste my time anymore. When people say Bitcoin is this, that. And then I say, okay, what is Bitcoin? Either silence or the wrong answer. Okay. Most people don't even know what it is. Okay. They heard somebody say something in the media. That reporter just picked up an anecdote somewhere, repeated it, and then it's a circle jerk. And they just repeat what they heard. They don't even know what it is. Number two, bear market. It could be a bear market, but you guys probably follow Bitcoin closer than I do. Where was Bitcoin about a year and a half ago? What price? Say 2019-ish.
About 6,000.
Yeah, it was low.
What is it now? What is it now?
30K. 29,000. Yeah.
5 times.
That's what I'm saying.
Now, contrast that to any other investment that Cramer covers. Anything. I'm like, come on. Bitcoin is volatile. Okay. And that volatility is to the upside and downside. But over practically any 5-year period, Bitcoin has outperformed anything in almost everything in fundamental finance and investment. And I'm not even a Bitcoin fan. I told you how I feel about Bitcoin. Bitcoin used to be, it, but it's lost its way through the political infighting. But math is math, man. Capital appreciation is what it is. Okay. Volatility is what it is. So, if you can't handle the volatility, I don't think anybody said, hey, buy some Bitcoin. It's probably the most stable, least volatile asset you can get your money hands on. That's not the case. It's volatile, but that volatility gives price appreciation potential or trading potential. That's not what I'm into. I'm not a trader, right? And I love to buy something, have it appreciate in price, make me wealthy. But that's not where the real value is. If you want to get wealthy, let's go back to the last paradigm shift that resembled Bitcoin. I used to use this a lot in 2014 to 2013, but now a lot of people do it. And that's comparing it to the internet. So you go back to the internet, early days, not very early when it was discovered, created, but when it started becoming popular, 1993 to 1995-ish, okay? You have a choice. You can buy IP packets, internet protocol packets. Those are little tiny things that go back and forth, that allow data to go back and forth through the internet. Or you could put your money into the infrastructure or the early companies in Bitcoin, not Bitcoin, in the internet. Okay, so imagine you would have bought Series C round or Series A round in Google, Amazon. Facebook came a lot later, but Google, Amazon, and Facebook. Or you would have been hoarding IP packets, which now sounds outrageous, but that's because you're 30 years after the fact. Okay. Who would have made by far the most money? How many IP packet traders do you see on the Forbes 400 list? Okay. Look at the top 5, top 10. That's all the internet. Those are the application providers who did a good job. You're always going to make more money on fundamentals than you're going to make buying and selling, knickknacks back and forth. The street vendors out in the street make some decent money, but you know who really made the money? The guys that built the stuff. And that's the case if you go back previous to the microcomputer boom. Okay, who made the most money there? Microsoft. Not the guys who, sold computer code snippets. Go back before then, the microcomputer boom, who made the most money? IBM. Go back before then, discovered electricity, fire, light, etc.
Yeah, it's funny you said it because that's to me is the altcoin market right there. It's like, hey, there you have it, people. You can go to the altcoin market, you can go get you a little street taco, but the restaurants was serving up the good cooking and the home food. So real quick, thanks Sergeant Crypto for the tip. Hot take: Reggie Middleton and Da Vinci Jeremy are both Satoshi, and Satoshi is black. He said. With that, let's go ahead and get to your project, Veritaseum, your bread and butter, your baby. How did that come? Like, what made you wake up one day and say, I want to do Veritaseum? How did it start, of course, and tell us about that project.
Well, in 2014, after we got the first swap to settle on the blockchain, I needed some help, needed some development talent. I had the analysts on the financial side. I had the analysts, needed some capital. So I formed an entity, a legal entity. I called it Veritaseum. And I used that as the cover of the vehicle to bring these pieces together. And that was Veritaseum. It was an interesting struggle. I have a very different background, particularly from the early crypto and blockchain days. I was known literally for calling every major boom and bust over the previous 8-9 years. And I did it publicly. You could look at the highlight reel, seeing the highlight reel. I won all the CNBC investment contests. I would win them back to back, which is interesting for one person to do that. I called Bear Stearns, Lehman Brothers, the European debt crisis. I called on the upside Google. I know Google is going to outperform the Android, collapse of BlackBerry, which is research in motion. So with all this positive press and outperformance that was provable, I had the hardest time raising capital, amazingly. So we struggled through. We basically ran out of money. And as regulators started looking at the system, I tried to move the system and reconfigure it so it wouldn't fall afoul of the prospective regulatory oversight, because it didn't exist at the time. Arguably still doesn't exist completely now, but basically I had to put the BTC swap system to bed. And the code obsolesces very quickly because things move very quickly. But the patent applications remain, okay? Like I said, we filed those patents. I came up with the idea in 2013. We filed them in April and May of 2014. The first one wasn't issued till 7 months ago. Okay, so that is a long prosecution period, and we still have more that we're working on. There's a lot of value there, but I couldn't realize that value at the time. I decided to come back and start it again, this time on the Ethereum platform, which has more flexibility, as we explained. And I talked to a couple of participants who I felt did a very good job with ICOs. Like, I'm not going to mention who, because I don't want to bring them in, because my name may still be a hot topic because of my litigation issues with enforcement arms. Okay, I came up with a system that I felt was legal, that was safe, at least relatively safe, and I did an ICO, raised a relatively small amount of money. I didn't feel I needed $1 billion or $4 billion, etc. I just needed to get the system off, and I wanted to run it as a business. I think
this is the 2017 one, correct?
Correct.
Right, and this is the one, again, folks, we were a part of this as well. Bitcoin Zay and I think we actually streamed this to our Instagram page at the time and stuff. So yeah, we were some of your earlier supporters as well. Go ahead.
Yeah, I appreciate that. I appreciate that. It was done very differently. Before the end of the actual ICO period, I had products and services ready to go. So you were able, this high-powered analysis that I said predicted the fall of all these big banks. By the way, the ratings agencies didn't do this. They didn't see it. I did. The investment banks had Bear Stearns at investment grade before it collapsed. It had General Growth Properties, which was the second largest commercial REIT in the country, at investment grade before it collapsed. Lehman Brothers, etc. I called all these as about the pop failures, bankruptcy. I actually called GGP a bankruptcy in the making, etc. GGP was 776 pages of analysis. Okay, I took every property that they had, I valued it separately, and I ignored everything that they reported to the SEC. And I said they're overvalued by about 100%. They threatened to sue me, but they couldn't. You know why? Because they had to file bankruptcy. Okay, so I was accomplishing what regulators didn't accomplish, what rating agencies didn't accomplish, what analysts and investment banks didn't accomplish. The analysis had value. I was willing to sell that analysis before the end of the IPO period for the actual tokens. So it launched, right, with a product or a service as a product ready to go. In my opinion, that service had significant value. And anybody who wants to disagree with it, talk to me, or you could go and Google these companies itself, see who predicted these falls and who didn't. It was me. Neil Rubini had a few calls, but I posted on the Reels blog, so who knows where he got the idea from? Wink, wink, right? From that period, after we, produced the analysis, then we started building the actual code. Okay, and that code was basically to ingest that analysis and create automatic investable portfolios, right? But self-directed. So it's basically a blueprint. You can invest in this, right? You put your assets up, you press these buttons on a smart contract, change the parameters, and it assists you in getting those tokens. And then we looked at the tokens that we thought had potential at that time, and time changed a lot. I mean, things change a lot over time, but this was 2017. We were looking at things such as Populous, PayPal, etc. Okay. Literally, as soon as ICO finished, I got contacted by certain government agencies, and it takes a lot of time and money going back and forth with them. This wasn't public information, but I had to deal with that throughout almost the entire life of the project.
Well, real quick, that happened that quickly in 2017?
Yes, it
okay,
did.
That clears up a lot already. We weren't sure if you got that tap on the shoulder 2 or 3 years later, all of a sudden, or if it was initial. So that clears up a lot. So
there's a lot more than a tap. See, a lot of things, what you see in the media and what you hear in public, is not indicative of what goes on, and it's private business. I'm not going to speak too much about it because
I understand that.
Okay, I signed a consent agreement that pretty much just keeps me quiet. But anybody who knows me knows how I feel about it, and the papers are public. So anybody who wants to know what my legal team's response was to whatever allegation that would make, just look at it. Our response was 427 pages. Okay, we had plenty of affiants and witnesses. So if you're curious, just read it. If you go through the media, chances are you're going to get one side of it, because only one side is really allowed to speak freely. But if you want to know anything that has nothing to do with SEC enforcement issues, has to do with anything, you look at both sides. Your friends are getting divorced, both of them, you love both of them. You don't just listen to them female or the male, you listen to both sides, and you'll see the truth is usually neither one side or the other, but somewhere in the middle.
Yeah, and for those who are unaware of what's happening, so essentially, Reggie Middleton did reach a settlement with the SEC over whatever allegations they had against him. I will say, when we first heard about it, because it wasn't just you, it seemed to us that the SEC were going after a lot of innovators in the space, especially innovators that didn't have enough resources to protect themselves from government agencies, where those government agencies were trying to actually stop them or slow them down. Because it was very interesting after you publicly went after the SEC. As you said, want to make sure people out there know I did PR for the military. Like, news stories aren't going to be writing a lot of bad pieces about the leadership and about the military itself versus some of the isolated incidents and actions. So I think what Reggie may possibly be alluding to, I'm not putting words in his mouth, but it's, part of his deal, he can't talk about what's going on in the SEC and all this. He can't say, well, this part was unfair to me or that part was unfair to me. But from their point of view, they can, as well as all these articles that came out, they can put all that as well without having any feedback from him. Is that kind of about right, Reggie?
Yeah, I don't want to comment on it.
I got you for sure.
Possible.
So that's what it
seems as it is, even though I didn't say anything wrong. You have to understand the SEC is a powerful agency. If you look at the crypto space, right? You said they picked on.
It seemed to me they picked on early innovators for sure. People who didn't have, the Brian Armstrongs. You don't have that legal team. You're not pulling in multi-millions. Good luck out there.
Yeah. And my legal team is Crackshot. The problem is, it's very difficult to defeat the government. And I would never fight the government voluntarily in the first place. I would never willingly want to do anything wrong because, even if I thought I was Mr. Bad Man, it's not a good business model.
No,
okay.
Sure.
But very, very difficult to defeat them. I've been looking at it, and it looks like only one company has really made leeway so far. And that company is still in litigation, and that's Ripple. Ripple's actually doing a very good job. So if you're looking at that, that's interesting because there's a lot to do. There's a lot of similarities between that and what I went through, but I'll hold it there. But it's, very interesting. And I did notice one thing. There's a company that I was paid to do analysis of. You had this very charismatic.
Well, I was about to bring it up next. See, I was going to show. Hell, let me let's talk about it. Hold on, I'll bring up the
Before
clip.
we get into that, though, I want to give. This is not my idea. This is someone else's idea, but it's interesting. A lot of the more credible projects that were taken down by the SEC had a lot of potential to change the status quo. Literally, a lot of them, like things like Telegram, Ripple, etc. And then there's some who, in my opinion, are obvious stamps, but are left untouched. Now, the SEC doesn't have the resources to go after everybody, so they have to select who they go after. But when you take a look at, a lot of the big cases, there's one side that has a certain characteristic and the other side that are untouched that has another characteristic. So keep that in mind when you, look at the big cases and who's allowed to skate and who isn't. And it's not my idea. This was told to me by somebody else, but when you take an objective look at it, it does hold water. But I'm not going to comment on any, past that. I really haven't commented on it at all. I just reiterated what was told to me. So you were saying that.
And again, as far as the SEC goes, this isn't like a smack around. It's like, hey, I don't want no beef with the SEC either. Again, it's just crazy to me. I feel like, hey, as a government agency, you all work with citizens. You're supposed to work. Technically, you work for us, but you're also taxpayers yourself working for the SEC. We're all supposed to work together. I would think the SEC would want innovation in America. I would think they will want us to become the future business leaders of the world and actually have a stake. So it doesn't make sense to me when I see them really come after some of the innovators in the space. Again, I'm assuming they're doing their job, but I don't know. As far as, let's get to it because I'm certainly curious. Two things, of course, your response in general, but also your actual thoughts on the Hex project, because we did have it here. And this is for those who watched it. This is what Richard Hex had to say. Also, I will comment on what we tweeted about it. Happened. I got to hear your thoughts on this. I mean, take it away.
I'm gonna give you a spicy ass comment.
And full disclosure, I'm trying to get Reggie on next week. So of course he'll probably hear these comments and respond as well. All
right. I'm gonna give you a funny ass thread here for the banter. Let's name some black founders in blockchain. Ready?
Arnold, you got Arnold from BitMEX.
Okay.
Reggie Middleton.
Yeah.
We're more of a media company than an actual blockchain project, so I won't. So I can't throw myself in there. Though Bitcoin Zay does some developing, he had ATMs. So hey.
Okay, you ready?
But seriously, it's only about
okay.
Off the top of my head, 3. Maybe
that's
3
a long enough list. All right. So Arthur got arrested.
Oh, you did not just go
for
there.
BitMEX.
You did not just go there. You did not just do that. Come on. So to be clear, I missed the joke, even though I will give it to Richard. He said he was trying to stir the pot. I thought him just bringing up people getting arrested wasn't cool. I didn't get the racial joke behind it. So that's something we did talk about on Talk Shop Live this weekend. Some of the other Hexicans who are whether black, white, Mexican, Hexican, a lot of them said, some of them said they caught it and they didn't like it. Some of them said they didn't catch it, or regardless, back and forth. Again, I was more concerned about the fact that another founder would throw other crypto founders under the bus when it came to talking jail or regulation in general. I wasn't cool with that part of it, regardless, period. But let's get into it. I mean, what are your thoughts? Like, what are your thoughts on what he said? And then what are your thoughts on the Hex project itself? Like, that's been the biggest talk here now, because a lot of people are saying, is Hex real or is it scam as far as our warriors go? So that's what brought him on the show to begin with. And then we brought you up because on the Twitter thread, People said Reggie actually did a breakdown of Hex. A lot of our crypto warriors respect you. So they were like, no, we followed this guy's breakdown, and that split the whole chat room in half. Some people were saying Richard Middleton, this is his breakdown. And then other people were saying Richard Hart, this is what he's saying. So Reggie, you have the floor.
Okay. Well, what's the first question? What do I think of Hex, or what do I think of Richard?
You answer however you want. What do you think of Richard and his comments?
Well, I don't know Richard. I didn't know anything about Hex. Someone with a lot of capital, a very low cost basis crypto holder, both in ETH and Bitcoin. So he has disposable capital, but they have disposable capital. And they're an investor in Hex. And they wanted me to do an analysis of Hex. And I'm like, I don't have the time to do that. I have a lot of things going on. And we're really working very hard on the patent and the IP stuff, because it's a big, big deal. Okay. Remind me, I want to go over that later on in the show. That's how big a deal it is. Well, I'll just tell you, I believe I founded DeFi, and I have a patent that covers a significant amount, not the majority of DeFi. So just think about how big that is as central bank digital currencies start to become the denominating currency. Okay. So doing all that, I don't have time to deal with Hex. But since this may have been a potential investor, I said, okay, I'll do it if you pay me too much money, thinking that would dissuade. Okay. It didn't dissuade. Okay. So I'm like, okay, they'll do it. And so I knew nothing about Hex. I knew nothing about Richard. I appeared on a Discourse Syndicate show, which is apparently a very heavy, a Hex promotional show. But since I didn't know who it was and I didn't know who Hex was, I just appeared, talked my book from and on. So as I started going through Hex, I had a team of analysts. I had 2 MBA CFAs, so certified financial analysts. I had 1 forensic accountant that does international work. I had a junior analyst who's a genius. He's a prodigy. Okay. I had a lawyer go over it, and I did it myself. Okay. As like a supervisor manager. Okay. A lot of brain power. You're talking about 6 man-months of work in the Hex project, even though I delivered it in 1 month. Okay. And you know how if you do service work, you know how that works, because it's not one person working 1 hour per day. Everybody jumps in, they work overtime till they get the work done. Okay, so we started from scratch, no preconceived notions, no bias, don't know Richard, right? Didn't have a reason to dislike him until I heard him, right? And Hex is a scam, period. Okay, a provable scam. And it's interesting because Richard has a very, very strong grasp on marketing, because it's a provable scam with a very, very strong social media following. Okay. And that's how the price is supported, in my opinion. I will walk you through the scam. As a matter of fact, I tweeted right before I got onto the to the show, snippets out of the report. The report's about 36 pages. I tweeted portions that walk through exactly how it's a scam. Arithmetically, legally, from the SEC's law, from the FTC law, and common sense. Arithmetic common sense. So let's walk through it. But as for what I feel about Richard, I still don't know him. I do realize that Richard is a performer. If you take a look at a lot of scammers, okay, they have to perform. That's how they get, capital in. Okay, and I don't even mean this to disrespect Richard. That black founder jail comment is not cool. I'm a black man. He's on a black man show. It's not true. He's on a crypto show for everybody, but the 2 hosts were black men. Highly, highly disrespectful. Okay. And then talking about his dick size and all that, it's ridiculous. Okay. But he is what he is, and he's doing his job. It got
crazy. But One thing I want to interrupt. The reason why I let some stuff fly in general, though, give the people what they want to see. They want to see it, let them see it.
Okay. And a lot of people are not going to see what I'm saying or not want to hear what I'm saying. No problem. I'm not a performer. Richard's a performer. Okay. So it's not even personal with Richard, because he's trying to create buzz. That's why that token price goes up. Like a shoe Ponzi, when that token price stalls, that Ponzi falls apart. If you wish, I'll walk you through it right here.
Oh, for sure. No, yes. Our warriors want to hear this. And as a really quick, Bitcoin Zay might have to leave. You all know he gets pulled in every direction all throughout the week. So if he disappears we'll still be here. Reggie, I wasn't sure how much time you had on the show today, but whenever you had to leave out as well, I just want to let you know we're good to go on that. But yes, we will. What's up?
I said, I'm staying for this. I got a little.
All right, well, there you go. Yeah, please walk us through it, because like I said, this is really what started this whole thing was from an investment point of view. On Bitcoin Fridays, we had one of Hexton's call. Hey, you guys don't know, or you're not investing in this project, you're crazy, back and forth for weeks. Get him on live. He comes on live. It's real. This is what it is. Hey, a competing person who we respect is saying, no, it's not real. And here you are telling us why this is not real. So tell us.
Okay. Well, it's not that it's real. Let's go for what it is. First of all, let's look at the founder, the promoter. Okay. I think a lot of people could see where he's rude. Some people respect him because they say he's outspoken. He talks a good game. It sounds like he really knows his stuff. Okay. If you don't know the stuff he's talking about. Okay. Now, once you know the stuff he's talking about, you realize that he doesn't. For instance, on the legal portion, he says, Reggie got hacked. I'm better than Reggie at everything. I'm better than this and that and that and that. I even reflect more like to him, etc. Okay. And then he discusses the legal portion with the SEC. He says the SEC found Reggie guilty. But wait a minute. He's discussing law and says the SEC found me guilty. He's also using that same knowledge of law to create what is not a security in Hex. So if you trust in Richard, even if you don't like his demeanor, his attitude, his mouth, etc., if you trust in Richard because you think he's smart and knowledgeable of the law, then that's an important characteristic, right? But when he talks about Reggie, he says the SEC found me guilty of selling unregistered security. Only courts can find somebody guilty of selling unregistered security. The SEC is not a court. A very powerful agency, okay, in the federal government, but they're not a court, right? Legal error, very simple one. First year law school, okay? So if you can make a mistake with that, do you really, really trust him to create a non-security where you're putting so much of your money in? He says they took all my money because I admitted that I defrauded and scammed people. Not true, just wrong. Another mistake, legally. All you have to do is just read the settlement agreement. Again, if you can make that mistake, you trust him in creating a non-security. And then he says, in order to be a security, you need to rely on the work of others, et cetera, et cetera, et cetera, et cetera. That is a snippet he got off Wikipedia. And he actually said that, okay? He taught himself securities law through Google and Wikipedia. And if you're smart, it's possible. But if it was really, really effective to do that, why would you hire a lawyer? My legal defense team ran the SEC for 10 years out of Harvard and Yale, multiple partners. Why would I pay all that money if I could just have Richard go to Wikipedia? It's not that simple. Now, we're going to go to how it's so simple. Hex rises and falls on a couple of things. Let me write this down, okay? It rises and falls on, or it lasts on Hex not being a security, number one, on its price perpetually going higher, number two, and on not having any material legal challenges, okay? Like it owns its own IP, etc. So those three things denote the potential success of Hex going forward or its failure and collapse. So let's go through what's one right now. We go through number one. Is Hex a security? I'm asking you.
Oh, in my point of view, anyone with a founder the SEC can go after is the security in their eyes. So
from SEC's perspective,
that's just me. I feel like anyone, literally the SEC can say, hey, we can put a pen on this founder and manipulate the price once we get our founder in our hands. To me, it's semi-security-ish. So I'll say that. What are your thoughts, Bitcoin Zay?
I think every project outside of Bitcoin can be called a security. Again, they can make up to say that you bought it with the intent.
Okay.
Yeah, exactly.
If Hex is a security, would that hurt or help the investors in Hex?
It will hurt. It would definitely hurt if it's a security.
That was my argument. I wasn't there, but
how much would it hurt them? How much would it hurt them by?
I think if it, let's say if it were called security overnight,
90% drop.
No, I think 30%, only because if the code is what he says the code is and people are actually locked in the contract, then technically if they try to sell out of it, they should take a big haircut. So if people weren't going to sell out of it and say, you know what, I'm going to stay where there's a SEC or not, where there's a security or not, same thing we're seeing with Ripple. If people were to say, I don't care, I'm staying, then maybe we only see 30 to 40% immediately.
Okay. So I'm going to challenge that, but we're going to challenge that later as we walk through what it is.
Okay.
So it's not hard to determine if Hex is a security. I'm going to have you, right, demonstrate to all your viewers right now. So you don't have to wait till next year, next month. You don't have to wait till overnight. You can wait till we finish taking a look at it. Go to the Hex homepage for me and, you know, show it to everybody.
No, for sure.
Hex.com.
For sure. All right, pulling this up. Hex.com. Let's see. Here we go. All right.
Okay, scroll up like 2 inches, 3 inches.
This is high as it goes. It might be the screen share cutting something off.
Okay. Okay. Well, it should say, oh, what does the last line say at the bottom? Right under interest a year. No.
Oh.
Go right back. We're right at it. Okay.
Hold on. I'm jacking this up. Hey, okay. People who are watching our Warriors, you get a live look at why sometimes we pause on you and we're trying to figure things out.
Okay,
right, here we
go. See right there?
Yeah.
Read the first 2 lines.
The first blockchain certificate of deposit, high
right
interest,
there. Right
no
there.
minimum.
Stop right there. No, stop. What did it say again?
High interest.
The first.
No, the first blockchain certificate of deposit.
Okay, keep that in your head. Now go to Google.
All right.
And Google Securities Act of 1933, Section 2A1.
What, 1933?
Yes.
Section 2A1?
Section 2A1. 2 open parentheses, A close parentheses, 1. Or we can just find it. When you get it, click it and go to Section 2A1.
There you go.
Oh, this is from a law firm though, but
if they actually have it.
Right, that's what I'm saying. If they actually have it, Section 2A1. Here it is. Section 2A1, the Security Act defines a security as.
Just go to the part that says certificate of deposit. It looks like it's a 4th line.
1, 2, 3, 4.
Read it out loud for everybody.
Let's see.
It's right there. Voting trust certificate of deposit for security.
Okay.
Right.
You're reading the law. You're reading the actual Securities Act of 1933. And it says what again?
Let's see.
Certificate of deposit for security. Yeah, certificate of deposit for security. This is also defined as security along with the other stuff on here. So yeah,
okay.
And on the first line it says first blockchain certificate of.
Oh wow! All right, hold on real quick. I mean, because you all say this is a perfect point for people who are watching as our viewers, and even you, Reggie. That just clicked to me because again, as we're talking live, some things does take me a second. So I'm reading it. I get what you're saying now. It's being defined as a security, folks. Here it says this act defines as a security or a security as, and one of the things here, the words is certificate of deposit. Yeah, I understand what you're saying now for sure.
Okay. So just so it's not lost on anybody, the discussion, the debate of whether it's security or not is over. It's a security. It's right there in the law. So this dude who's so smart that he's smarter than me and he's smarter than Arthur and all these Black founders, just to put this in a perspective, okay? I know Arthur, okay? Arthur built from scratch. At the time, the largest Bitcoin exchange in the world. In 2019, the summer of 2019.
Shout out to Arthur and BitMEX for real.
Right. In the summer of 2019, we had a discussion. He told me he did about $11.5 to $12 billion of volume per day. Compare that to Goldman, compare that to Morgan Stanley, et cetera, when they were 4 years old. Compare it to them now. Okay. So he actually created something. You're not going to discuss the legal issues outside of the fact it's dangerous. I don't want to get into that. But the fact that he would bring that Richard would bring that up in a disparaging way is disgusting to me. And then he comments on me. He says that I was, what did he call it? Clout chasing and et cetera. Well, I created DeFi. I patented DeFi. Richard said, more than a dozen times that Hex is decentralized. Hex is a certificate deposit. It's finance. If it's decentralized finance application and I created DeFi, how am I cloud chasing? As a matter of fact, if I patented DeFi, then he's infringing on it, quite possibly. I didn't have time to look at it because I don't give a damn about Richard, honestly. But that statement really offended me. So I took a look at it, by 85% sure that he's infringing with Hex right now. Hex is really a swap with a time lock using a decentralized currency. I have a hard lock on that. Okay? If I cared enough about him, I would have looked at it and matched it with the code. I had one of my analysts do it, but I don't care enough about him. But being that Hex is, as we just proven, a definitive security, and it's so simply a security, there's not even room to argue about it. You pulled up the law said a security, a certificate deposit is a security. His homepage on the second line says a blockchain security. There's nothing to discuss, nothing to debate, right? He tries to make an argument to show how smart he is, but his grasp of securities law is about as strong as his grasp is the consent agreement that I signed with the SEC. Okay, that is not a man, in my personal opinion, you should be trusting your money with. Okay, so we're gonna move forward because I don't want to make it about him. I want to make it about what he built and the fact that it is not sustainable. And I'm shocked that it survived as long as it did. Really? And the reason I think it survived as long as it did is if he would have hurt somebody, he would be hurting individual investors, not the big banks. Okay? This is a theory that was given to me by somebody else. But I heard it and I'm like, history seems to show there's some credence to that, but I don't want to, comment on it because I don't want to make anybody look good, bad, etc. So we discussed the security thing. Do you agree that Hex is security, fellas?
I would say I'm not going to agree anything is a security in the space only because it comes with a lot and I don't want to be involved in.
Okay, fair enough.
I will say
fair enough.
I will say the first time I saw Hex, I said it was a security because the only use case was the number going up. And if that's the only use case, and that was all it was give us your money so the price can increase. That's usually a security by loose definition, but the certificate of deposit kind of settles it at that point.
I mean, if the securities law says your product, if you called your product Gentleman Coin, and then someone pulled up the securities law and said Gentleman Coin is a security, are you going to argue that? Just a rhetorical question. Don't bother answering it. Okay, so I believe, at least in terms of an objective observer, the security discussion is over. Let's go to number 2. Being able to maintain price increases via Pumpamentals, right? Continuing what I call a decentralized Ponzi or pyramid. So I'm saying that Hex looks, smells, acts, and feels like a Ponzi scheme. Okay? Now, I can have you Google the definition of a Ponzi scheme from the SEC's perspective and the Federal Trade Commission's perspective. But I'm going to recite it to you. I'm going to read it to you. You can actually have it here. Or if you want, you don't have to trust me. You could Google it. Okay? But before we go on, one of the major tenets of a Ponzi scheme is something that doesn't make money. Okay? So you have an investment opportunity. You have a business. That business usually generates revenue. Hopefully, your costs are less than your revenues generated. Then you have profit. And that profit is given to the business holders, et cetera, the shareholders, the proprietor of the business, et cetera. Even if it doesn't make a profit, those revenues are still used to run the business. A Ponzi scheme, in part, is a business that doesn't generate revenue at all, but still manages to pay those participants in the business. Now, how do you pay participants in a business without making money? You lie and mislead. Okay? So, before we go on, does Hex generate revenue? Anybody that you know of?
Now that I know of, what I will say from what Richard explained, a part of the value is technically being a store of value because people do have their money locked in it, time locked in it. So from part of my understanding is that in of itself gives it some value. And one pushback I want to give you from one of our warriors here, Kasha Tariq, give a shout out to Kasha. Actually, Kasha is a part of the Ripple Nation, XRP out there. But he does give objective reviews about everything. He's saying just because it's only use cases ROI is not a security. It's also about how and who sells it. He said he thinks that's an important point that's being missed. Who and how they sell it. So yeah, I would love your thoughts on that as well. Yeah,
I'll address that. You looked up the securities law yourself just now. That's why I made sure everybody did it themselves. Okay, and that definition of the security. Okay, did it mention who and how sells it? Who and how it was sold?
That's a good point. I mean, that's a great point.
When you look up the law, you can argue with the SEC itself. Okay, and that's not even the SEC, because the SEC doesn't write those laws. You can argue with Congress, or you can argue with, guys on the internet, Richard, etc. Okay, the law is actually very simple. Certificate of deposits are securities. Now, if I was Richard, I wouldn't be, right? But if I was, and I tried to argue that, I would say, well, banks sell banks sell certificates of deposits, okay? And they're not sold as securities. And that's true. So it is a matter of how you sell it. But you know why? Banks are state chartered financial institutions. So they're regulated by the state. They're federally regulated by the OCC, by the Federal Reserve, and by several other FinCEN, by several other regulators. And banks pay into the FDIC, which is the Federal Deposit Insurance Corporation. So they pay into an insurance pool. That gives them an exemption. So anybody who writes a certificate of deposit that is not carrying a state banking charter and doesn't pay into the FDIC pool simply wrote a security. Now, I'm sure Richard went through all this with you on his show before I showed up. So you probably have all that covered, right?
Right. No, yeah.
He gave us
his thoughts and version of it. So to answer your question on, how does it make money? I'm not entirely sure, all the value proposition, but one point I did see that he made was about this whole T-share thing, where how essentially he's tagging T-shares to dollars. He's tethering it to dollars rather than Bitcoin and Ethereum. That way, when the Bitcoin price drops, it's untethered because people are still trying to buy and stake their HEX early enough when that T-share price is lower, because I guess throughout his lifetime, it will continuously increase. So that, just to answer your question, from my understanding, is one of the ways people in HEX gain and retain some of their value in that project.
Okay. And I understand that. But the question was, how does HEX generate revenue?
I couldn't answer that. Then. I could not answer that for you.
Right. And you're not the only one who can answer that. I don't think anybody can answer it. And the reason is it doesn't generate revenue. HEX is a system, a smart contract, and a system of apparently well-written code, okay? But it doesn't generate revenue. It doesn't take money from the outside and bring it in. Richard has a habit, a proclivity of comparing HEX to Bitcoin, okay? Bitcoin generates revenue, right? The mining system generates tens and hundreds of millions of dollars a year, okay? Ethereum generates revenue. The mining system generates tens and hundreds of millions of dollars a year. I'm sorry, tens of millions of dollars. There's a chart that I tweeted. I don't have the number memorized, but it generates money, revenue. It takes money from the outside and brings it in. Then it could take that money and then distribute it. That's not a Ponzi. That is a regular business. You make money by taking other people's money and you send it to your shareholders or your stakeholders. HEX generates zero revenue, except for money that it takes from. Where does the money that HEX generates, where does it come from? Think of the teacher. What happens if you have a stake and you break that stake early? What happens?
Right. For that one, you owe money.
Who you owe money to? Who?
The project is from I'm understanding. Oh, to other holders, to other stakers, I guess, in that project.
Right. Okay. So when stakers make their money from other stakers and not from business revenues and profits, that is called a Ponzi. When early stakeholders come in and they get paid by the newer stakeholders coming in, and not getting paid by revenues generated from the actual project, that is called a Ponzi scheme. In some parlance, it's called a pyramid scheme because the guys at the top get paid by guys at the bottom, or a Ponzi scheme where the earlier stakeholders get paid by the later stakeholders. And Ponzi schemes can go up in price very significantly. Think of Bernie Madoff. Ran that Ponzi for a long time. How did Bernie Madoff's Ponzi work? Well, he took money in, and then when the original stakeholders wanted money, wanted to see a return, he took the money from later stakeholders and gave it and represented it to the earlier stakeholders. A Ponzi. It goes around in a circle because it can't leave the circle because there's no money. There is no money in Hex.
Now,
Okay.
now the quick challenge again. These Hexicans are in here. They are challenging some of these points. Reggie.
By the way, all these challenges were answered in the report, but we'll do it verbally. And realize the only reason I'm doing this is because of that very, very offensive statement that Richard did, and the fact that I think a lot of Richard's followers are in the Black population. Right?
They are, which is why this is important as well.
If I can avoid them getting taken, I would. And it's not like I'm favoring Blacks over others. I'm not. You know, my followers aren't majority Black, okay? But that doesn't mean you allow somebody to get taken and ripped off. I listen to Richard talk. He's a charlatan. And you've never heard me talk negatively about anybody if you look at all my Twitter feeds. But Richard is over the top, okay? So as we go through these, I'll show you a way Richard can be stopped, even if the SEC or whatever regulatory agencies don't. And I'm not going to stick the SEC on them because I'm not really a big fan of certain enforcement agencies either. But, you know, good has to be done. And we'll go through that later on in the discussion if I have the time. So
I'll throw, you're right. You do have this written on your Twitter, so they can check out your Twitter if they want to see the entire breakdown. I won't ask you for that entire breakdown. This will actually, I'm glad you mentioned that. This will be the last rebuttal on it because the same way I allowed Richard to share what he wanted to share, I just want you to share what you want to share. Warriors, you all can decide what you take from both and do your own research, of course. But just on the only reason I wanted to challenge this, and one of the people wanted to challenge it, is because it does have to do with how they make money. They saying by the token generation, it generates new tokens via inflation and gives it to Hex stakers. And they're saying that in of itself is how they make money. With that T-share price going up, stakers who staked at an earlier price deciding to stay, continue their stake even longer, adds that value locked up from what I understood from the project. So what do you say to that, I guess, from the new tokens being inflated? Would that actually give it value? Would that actually generate revenue technically?
Okay. As a public service announcement, I'm going to extend this period, this Q&A a little longer as a public service announcement.
Okay.
I don't need to get my story out because my story is basically, you know, my fodder, my game are big companies, American Express, Goldman Sachs, etc. This is very different. This is retail. I feel I'm doing a public service, so I'm going to extend this. Okay. What is inflation?
Inflation, prices rise, the value goes down essentially.
Say that one more time.
I said for me, it's prices rising, but the value is going down essentially. You're paying more for less.
Okay. So if that's the case, and that doesn't sound wrong to me, how is that making money? If the value goes down, but the prices go up, what have you made? I define it, I teach kids in school a lot. You know, I like to be very generous with my time and resources. So I define it as a pizza pie. You, your partner, and I sit down, we go get a nice, delicious pie, okay? Fresh mozzarella, you know, fresh tomatoes, basil, the works, right? A little olive oil, right? Maybe a little hot sauce, you know. We split it 3 ways. We make 3 slices of pie. I get a big slice like this. You get a big slice. Your partner gets a big slice. We get ready to eat. All of a sudden, someone knocks on the door and it's 17 Hexicans. But we welcome them in and say, you know, would you like something to eat? They're like, sure, but the pizza store is closed. But Richard comes in and says, hey, I can generate more pizza. And I say, how? He says, you take the 3 slices, you put it back in 1 slice, and now we slice it 20 times, 3 plus 17, versus 3 times. Now, everybody has pizza, and we have 3, let's do the math quickly, 10, 25, 6. We have 7 times more pizza than we did before we walked in. So not only does everybody get pizza, but now we're all 7 times richer in pizza. We have 7 times more pizza. That's what Richard says. But you, my brother, says, but wait a minute. We have the same 1 pizza pie. We just sliced it 20 times versus 3 times. So actually, we're not 17 times richer. We're actually poorer because you had a pizza slice that big before Richard decided to inflate everything. Now your pizza slice is that big after inflation. Inflation is a tax on value. That's what inflation is. Richard is saying, I'm going to pay you a tax on value. I'm going to pay you less and tell you to believe it's more. And that's what happens when that smart contract divvies up that hex token via the T shares. Right? It pays you less, but it's telling you it's paying you more. Nominally, it's what it tells you. In real terms, which is profit after inflation, is what it actually is. Nominal, real. A nominal interest rate, a real interest rate. A nominal return, a real return. They calculate your real return. You take the raw return, 20%, you subtract the inflation rate, 4%, and you have a 16% nominal return. Now, to calculate the real return for HEX, you have to subtract the inflation rate. So let's say HEX pays 3.69% inflation, right? Hard-coded in the contract. I think that's the number, okay? So its nominal return for everybody who stakes is what?
Who stakes what's that?
3.69%, right? 3.69%. So that's the nominal rate. Okay, that's cool. And we're going to get into how they get to 40% a little later, okay? Now, what's the real return for all hexagons, assuming you're all stake?
If all of them are staking?
Yeah, take that 3.69% nominal return and subtract inflation from it. What's the real return?
What is it? I'm terrible with math at 7 a.m. What's going on?
What does HEX pay? What does HEX pay?
Oh, I'm not sure how much they're paying on it.
No, they pay inflation, right? And you define inflation as the price going up with the value going down.
Right.
So HEX pays inflation. To get a real return, you take your nominal return and you subtract the inflation from it. Okay, so all HEX pays is inflation, and they don't generate money from the outside at all, so they have nothing else to pay but inflation, right? If all HEX pays is inflation, and its nominal return is 3.69%, what's his real return? Subtract the inflation for 3.69.
Yeah, okay, you're saying if you're lucky, you'll break even and not actually go negative, possibly. I get you.
Right. From an income perspective, HEX
Right.
pays 0% real return, 0. This is math. Real nominal return 3.69 minus inflation, 3.69 is 0. Now, after this, I'm not going to debate more because now you're debating math. You're not debating Reggie, okay? When you can prove that 3.69 minus 3.69 isn't 0, I'll continue that conversation. Until then, HEX guaranteed, the smart contract is hard-coded to pay you 0% real return. Now, how do you get 40% and all that other stuff? Well, that's when the Ponzi scheme comes in, because the longer you stake, the higher your nominal return, so the higher your inflation rate. But that money comes from who? All the new dudes who came in who didn't stake their HEX. Okay, so they don't get part of that inflation rate return. So now, if there's 100 of us and all 100 of us stake, we get 3.69% return. Okay, nominal. But that 3.69% return came from reducing the value of all of our hexes, okay, or hex units. Or
I guess you're saying they're dividing it up, basically. So
right, they take the pizza pie and cutting it up. They're not bringing more pizza in the room. They didn't go to the pizza store. They're just cutting up that pizza pie.
Someone's asking from a traditional point, Biggs mock crypto. So if I lock up $1,000 in a CD and they give me 1% APY, how is that 1% created?
Well, it all depends, but usually it's created through the operations of the bank. You see, take a look at the bank's balance sheet and income statement. Take a look at HEX's income statement. This all goes down to revenue, right? Where did HEX make its money? Where did it come from? 0 is all you need to know. Take a look at JP Morgan's balance sheet. Take a look at their net interest margin and how much money they made from lending. Tens of billions of dollars quarterly. So that's where that money comes from. And who knows where HEX comes from because it doesn't generate anything. Now, when you want to get a real interest rate return, you do have to subtract inflation from JP Morgan's yield. And inflation is actually very high right now, though nobody seems to be admitting it. And returns are very low. But over time, JP Morgan makes a lot of money. If JP Morgan only made their money from ripping one CD holder to pay another one, well, who knows? They probably would never go to jail. It would be illegal, right?
Yeah, JP Morgan got all types of stuff going on. They're not, listen,
Yeah.
they got shipments still missing in Miami that listen, they're not even worried about this stuff.
So this concept, now, I don't expect the average person to know this, okay? And that's what, in my opinion, real enforcement should do. Now, if HEX is advertised as a winner-take-all game, okay, and not as an actual investment that pays actual interest, then I don't think there's anything wrong with it, because now you're voluntarily going in, right? And the only way to make money from HEX is to take it from somebody else. That's the only way, because HEX doesn't generate money, right? All it does is chop up its own tokens and redistribute the tokens between the people who already have it. So in order for you to make more than 3.69%, you have to take it from somebody else in the system, because not a dollar or a dime goes in the HEX from outside the system. Or if it does, it's so de minimis, I'm not aware of it.
I will say I don't, I don't want to spend up too much more of your time on HEX. If you had anything else you wanted to add on the project, definitely put it out there for our warriors out there. A question I would have: people were saying this on Twitter. Did you and Richard already have a? I guess when you were invited on to whatever that show was, did you already have like an interview together? Is that what happened? Apparently,
I challenged Richard to a public debate 5 times. Listen very carefully. What do you hear? That's what I heard when I asked Richard, let's do this in public, dude.
Hey, listen, like I said, I'll be more than happy to moderate, because I don't have a dog in this fight at this point. We're maximalists for the most part over here. And we supported your project in the past. And like I said, I told the warriors here, we were thinking about supporting HEX because of all the Hexans that are coming in to the stream until, we started to get the pushback. So I am more than happy to have Reggie and Richard here to talk this. I'm not sure if it'll be more of a conversation or 15 minutes of yelling than we end the stream, but I'm definitely would love to have you all here to hear your points on this.
That's not my style. That's not my style. I don't yell. I don't curse. I don't all that. I don't disrespect. I don't call people names. But Richard went too far, in my opinion. I could care less about Richard. Richard has a very strong social media following. They wrecked my Twitter feed for 2 weeks after I released that report. I mean,
when you released the
yeah. They came
I already
in.
know they came straight for you.
Yeah, your mother's this, that. You don't know what you're doing. You don't know DeFi. You know nothing about DeFi. You're old school finance. They're saying this to the dude that invented DeFi. You know what I mean? You don't know DeFi. So I'm doing this literally as a public service announcement for the Hexicans who don't know what they're getting into. Okay? And that's it. And all Hexicans, not a certain Hexican. All, if you know what you're getting into, no problem. Because the way the Ponzi scheme works, if you look up the definition of a Ponzi in SEC and securities law under the SEC or under the FTC, it describes HEX perfectly. I even have case law. I cited case law where you go to different case law and you can see exactly, what defines a Ponzi, what defines a pyramid, etc. It's pretty much an open and shut case, but I'm not a court of law. I'm not a regulator. I'm a guy that was paid to do a report. Okay, I did the report. The guy didn't want the report private. He wanted it to be made public.
And who paid you to do that report?
That wouldn't be cool.
I wasn't sure. I had to ask the question. You threw the question out. I picked it up and I shot the ball right back. All right.
Well, put it this way. You know who it was? Someone who owns a significant amount of HEX. Okay. This came from the HEX community.
So a Hexican. We can say a Hexican asked.
Yeah.
Oh, wow.
He wasn't happy with the content of the report, but that means that he thought the report was going to say something else. But I don't do puff pieces. He asked me to do an analysis. He didn't ask me to do a marketing piece. If he did, I would have said no. Actually, I said no to the analysis as well. But, he paid, good money. So I said, okay, I'll do what he asked.
Well, okay, whether it's HEX, XRP, whatever project or coin out there, I guess, let's ask this, because a lot of people are just traders and investors. They're like, hey, I don't care if it's a security or what. I want my money. I want to get out before the next guy gets the rug pulled for regardless.
How?
So
it's locked up and staked. How are you going to do that?
That's what I was going to ask next. So when it comes to HEX, as an investor or trader, do you suggest people even look at the project in the short term to say, hey, maybe it's security, but I can still make money on it before the end of the year? Would you say yay or nay to that?
I'm not going to give investment advice, but I do know how it works. It works by the way a Ponzi scheme works is the price goes up. Everybody makes a lot of money, particularly the early founders, okay? The early investors. They make a lot of money. And then it's like an exit scam, basically. When things are about to turn, they scram, okay? HEX has extended that programmatically by having staking lockups in the contract. So you do a 3, 5, 10-year, 14-year stake. You can't just get up and run. So it creates a lack of volatility, a synthetic programmatic stability that you can't take the assets and run. But let's suppose we're doing this, and there's a couple of very aggressive SEC prosecutors. Let's suppose they say, wow, Reggie actually quoted the SEC law, said certificate deposit, etc. Suppose we can't ignore that anymore. And they came down on Hex, okay? Which they may have done already, I have no idea, but I don't really care. You know, I'm not a big fan of unfair prosecution, but I'm also not a big fan of Ponzi schemes either, okay? But I'm emotionless on this. But let's suppose someone were to get attacked by the SEC or even inquired for the SEC. You can't get your money out because you programmatically locked it up, okay? That will exacerbate the drop. And Hex wouldn't be able to trade on any exchange that did business in the US once it's known as a security, because now those exchanges are at risk. So now you can only go through a decentralized contract. These decentralized contracts are not all that decentralized. Uniswap's interface won't trade VERI tokens. If it's decentralized, how do you do that? Well, they do that at the interface. You have to go around that interface into the actual contract itself. So you're going to have a dearth of liquidity and a dearth of ability to trade. At the same time, you're going to have regulatory and legal pressures. Does that sound like a good risk-reward scenario? I'm not going to answer that for you. I'm just giving you perspective.
No, and for sure, I'm sure everyone in here appreciates your perspective. I'm looking at this chat box as you talk because it is divided in half, as it were last week. It was divided in half. But again, that's Hex. We get it.
And that's cool. That's cool. It's cool that's divided in half. You could go in the Hex all you want, but I want everybody to understand what you're buying. You're not buying a certificate of deposit that pays 40% interest. You're buying, right, something that can be legally described as a pyramid, a Ponzi, and a security if you go through the law. And I tweeted the laws out. You can look them up. Okay, I'm not outright saying it will be because that's up for a court of law. That's not my purview. I'm simply doing a risk-reward analysis. Okay, so as long as you know what you're getting into, have fun, go get it. I hope you do another 10,000% return, right? But if you thought it was something different, caveat emptor. That's all. That's my job. Just educate people what they're getting into, not to tell them to get into it or not to get into it. Okay, I'll leave it there.
All right, elevator pitch. I see you on the elevator. Oh, you've been in crypto for a long time. Hey, man, is XRP a security? Should I sell that? What are your thoughts on that one?
Well,
because they're going under the same scrutiny.
Yeah, by the same prosecutor. Actually, if you take a look at it, it's the same. Using
about to get that, they're gonna get that promotion. They said, "Look, when I'm done with the SEC, hey, on to the White House, baby. I got 3 under me."
Well, I'm trying to think of what would be prudent for me to say, and the answer to that would probably be nothing. But
we can leave it there if it's nothing, just to be clear.
Well, no, I'm going to say that the argument for XRP to have been a security was much stronger 9 years ago. Okay, to bring that argument now, right before the last chairman would leave, seems, very risky on the prosecutorial side, especially since XRP lawyers are very good. Very good. I'm not going to go into what I went through, but basically there's a modus operandi that appears from prosecutorial side. So they have a set pattern of how they do things, and I recognize it. The lawyers on the XRP side were calling it punching holes and pushing back in a very, very effective way. We're all waiting with bated breath for the discovery production from the SEC on discussions on what makes a security and what doesn't make a security, particularly in terms of Bitcoin, Ethereum, and XRP. There's, if I'm not mistaken, there's still a delay, and the judge is putting pressure on them. There's a strong chance that the answer to that is going to be worth another extended 2-hour show, just the answer to that question, which is quite possibly why it's taking so long to produce it, but who knows? I don't know. I'm not part of it. Hopefully I never get entangled with that nonsense again, but it is interesting. But whether XRP is security or not, it may have been a security. Now, arguing that's a security is a much harder argument, in my opinion, but I'm not a lawyer. I'm not involved. I'm definitely not privy to all the, discovery stuff.
All right, folks, you heard it here live first. Reggie Middleton, XRP from 56 cents back to $3. All right, no, I'm just kidding. Just jokes. All right, and then this is coming up in the chat as well. And I will say, of course, it's crazy because since this is a headline now, this is the only pushback I've seen against you, of course, and that is that whole SEC where you had to settle with them. Is there anything you can tell us about that project Veritaseum, what happened with that, and where you're going with it now, I guess? Because I guess people are still saying they're holding those tokens. There are people also saying, hey, is VERI even doing anything? People are saying the whole, again, the SEC thing. But one thing, people, you want to remember, the government don't let people walk around free if they're criminals. So that was my thought behind it. But I don't know, Reggie, can you unpack some of that for us?
Okay, well, there's a Veritaseum Telegram group. On Telegram. It's called Veritaseum Official. So just go to Veritaseum Official on Telegram. You could join that group. They are not bound by consent orders, decrees. They are not the targets or were the targets of the SEC. They can speak much more freely. I don't want to take the risk. I can tell you.
Perfect. No, you heard it, folks. I'll go into the Veritaseum Telegram myself, actually. And yeah, we'll do that on our side then. Appreciate that.
Okay. Now, I'm going to give you an update because they are 2,700 some odd members of the people who I was alleged to have defrauded. And they're very active and they're very smart. I can tell you what's going on there, but the stuff purely SEC related, I'm going to let them discuss. They have retained legal counsel, Jeremy Hogan. If you follow XRP, this is the lawyer that breaks down the the Ripple versus SEC versus Ripple legal case. He's done a very good job, okay? And I suggest you subscribe to him because he breaks down, he has a true understanding of how it works. Significantly above that of Richard Hart, believe it or not, okay?
For sure, we'll definitely look into that. And then,
well, one second, I want to get this part out, okay? So, what they've done is they hired him to pursue a no action letter from the SEC. Basically, they want the SEC to say it's all right for them and for the Veritaseum company to deal with the Veritaseum tokens. And they made a legal argument, which I thought was very strong. I had nothing to do with it. So, I didn't write it. I didn't pay for it. I didn't pick the lawyer. I have nothing to do with it. They did this independently. We recently found out that they were denied, okay? Which is very interesting. So, that lawyer, Jeremy Hogan, is going to appear, I think, at 2:00 this afternoon, and he's going to address his interaction with the SEC on behalf of the Veritaseum holders and why he feels they were denied, et cetera. Extremely interesting. And on the phone call was the prosecutor that's doing all the XRP and Veritaseum stuff. So if you want to know about what happens, has nothing to do with me directly because I'm not involved, but that would be a very, very interesting discussion, and he's taking questions. They also are researching companies who've infringed on the Veritaseum IP.
I saw that. Yeah, I was going to ask you about that for sure.
Okay. So my analyst staff are going through it, and so are developers, our outside development team, so there's no bias or subjectivity. We have, and this is our opinion, but our opinion is formed from understanding the patent and going through actual computer code, okay? And taking the computer code and linking it directly to claims in the patent. We have about 82 entities. 5 of those entities have balance sheets over $1 trillion each. We have processors, et cetera. These are clients of a very, very large blockchain company, software company. These clients include MasterCard, Visa, American Express. The infringed revenue amount is amounting to somewhere around $49 billion annually. Oh, and wow. We're about 1/3 of the way through. So we think about $150 billion in terms of infringed revenue amount. This is just one jurisdiction, and we haven't finished yet. So what they're doing is they're saying who infringes upon the IP, and if they can win the right to use the VERI tokens without problems from regulators, then they use our rental platform to basically participate in licensing that revenue, our IP, to all these multi-trillion-dollar entities. So a real fundamental use case where revenue comes from the outside into the token instead of just tapping the token up. So very interesting. Ask all your questions in the actual platform. It's a very active community. They're very smart. Take a look at the analysis that were done. They did analysis on Uniswap. They did analysis on Ripple. They did analysis on SBI, on Credit Suisse. Fascinating stuff. Fascinating stuff.
I was having an SBI. There we go. So with that, and you kind of already alluded to it, you're going after people for essentially stealing intellectual property of Veritaseum. Veritaseum.
Well, not necessarily going after. We're investigating and say, if I invented something and I went through hell, tangling with the SEC, running out of money, spending all my personal assets, so I'm broke, etc. I created a platform. If someone's making billions of dollars off my platform, and it's my platform, or at least I invented it, then we have to have a discussion, okay? Not a patent troll, not banging people with hangers, not chasing people with lawyers. Just that simple, okay?
Okay, well, definitely the wrong words for them, but exactly what you just said, I thought that in my head. And when it comes to PAXG, I remember after the SEC came after you, it literally was like a week, if not even a week, that PAXG came out. We were like, oh my goodness, this is
the
timing
good. I hear 'em.
on this was amazing. So actually, this is going to be a two-part question. I rarely go down these paths. Again, I literally don't think like this, but this is a part of the conversation when it comes. Do you think you were targeted because of race, first and foremost? And then what are your thoughts on PAXG? It seemed to be very similar to what you were doing, and it came out literally a week after you were fined by the SEC and all that news articles came out, if I remember correctly. I mean, we covered it when it came out because you were like, wait, he's got fined and then PAXG came out. So again, do you think the SEC thing had anything to do with race? And what are your thoughts on PAXG?
Well, I think I've already talked too much on the SEC. So let's take the SEC out and let's just take.
Let's go. PAXG.
I'll go to the PAXG. I'll explain what I've had to go through my lifetime. When people see me, like for instance, let's take the invention of DeFi. Nobody seems to argue with the fact that Vitalik Buterin created Ethereum. Okay, nobody seems to argue with the fact that this entrepreneur created that platform. But for some reason, I provably created DeFi, and all hell breaks loose. Why is that? There is, not for everybody, but there's an undercurrent that I feel that I need to prove myself, or more than someone else does, or that it is okay to say certain things. This is what disturbed me so much about what Richard Hart said. He came on your show and said, list all the Black crypto founders, and then started listing how one went to jail, one's guilty of fraud, one is, I'm better than him, I'm better than all of them at this, that, and that. That is not something that I would deign to say if I went on a show. Name all white crypto founders. Well, this one went to jail, that one's a fraud, I'm better than all of them combined. It would never think about coming out of my mouth. The fact that he feels he can do that, I think answers your question. Think it through. But I'm not going to comment directly on any particular.
No, I got you. You answered it, sure.
Now, PAXG ripped off my idea. They did. I think, the first implementation I know of, and I think they had the best implementation. I didn't patent it. I spent a lot of my time, honestly, all that time was spent fighting with regulators, etc. Very distracting. But I did patent something, and it's my opinion that entity has infringed on my patent. Okay? We'll get to that point when we do. It's not public, but we may make it public. It all depends if they play ball or not. Okay, so like I said, the ability to have created the IP behind DeFi and patented it is worth a lot. Imagine inventing and patenting e-commerce over the internet. So that's how I look at it. I'm very bullish on it. But there's a lot of pitfalls. There's a lot of things that get involved, a lot of capital required, et cetera. But I'm happy. I'm proud of myself, proud of my team, proud of my supportive family. So I'm proud of you guys.
No, we appreciate it. And last few things. So first, when it comes to regulation, what are your thoughts on regulation in space? Should we have regulation? Honestly, I'm for no regulation by authorities. I'm all for self-regulation. I know some people don't like it. I'm for self-regulation. But what are your thoughts when it comes to regulation in this space? And the reason why I ask that is because, I listen to you. We've been following you. Like I said, we've been following you for a long time. Bitcoin Zay was a fan of yours when he first entered space. When I entered space, he's telling me, of course, about you, Arthur Hayes, and all these guys. So we've been following you for a while. But it's also one of those things where we see in the chat box where it's just like, no, Richard's right. No, Reggie's right. It's like, okay, well, how do we regulate? How do we know who's right? Who's the liar? Who's the charlatan? And with all that, of course, comes regulation, because then people go to mommy and daddy's nanny state, and then they say, fine, if you all can't figure it out, we'll send people down there to figure it out for you. And next thing you know, we have these draconian laws like we're seeing in New York, where you can't even move as a crypto company. So that's why I bring that question. Your thoughts on regulation and self-regulation.
Okay. Well, I'll start with a preface. My opinion is irrelevant. So it's not like
same here.
So, but as for what my irrelevant opinion is, I think there should be regulation. Okay, because it won't grow to the real money until it's regulated. Because real money, no matter how bullish they are, a lot of the big institutions can't touch it unless there's regulation. Okay. With that being said, in order for regulation to work, right, it has to have a light touch to the innovative, to the new aspects of any business process or technology. The reason why the US controls the internet now, and all the biggest internet companies are from the US, is because it wasn't regulated in the hell. Okay? They're doing that with the blockchain, and they're forcing all the private keys of significance and all the intellectual capital of significance offshore. I'm terrified of doing business in the US now. I patented the fastest growing financial sector in the history of this country. And I was told they don't want me here, basically, literally, in writing. That's not good, especially when you're in active competition with other powerful sovereign nations. China is not joking. They're not. Okay? Neither is Japan. Europe is, a little slack, but at least Japan's our ally for now. China is a love-hate relationship. They're a frenemy, okay? But they're very aggressive. And you have depowered the US purposely by chasing innovation, intellectual capital offshore. Telegram, Ripple, Veritaseum, Block One,
Binance, technically.
Binance, etc. I expect Binance to I'm sure they're under investigation, positive.
Well, something's going on right now. They've been listening. The cracks have been showing. Something's happening.
And I'm disappointed with how the thing with Arthur went down, but back to the question that I answered before without being direct, I'm not shocked. Okay. There's a way to regulate and to get the bad players off without chasing the capital offshore, intellectual capital. Because when you do that, it runs to where it's treated best. Now, China is a pretty rough place to do business as well, but I don't see China being nearly as aggressive as the US. Maybe it's because I'm not there, who knows? But you have Singapore, you have other places. There's a better way to do it. So you can regulate, but regulate fairly. Don't make the rules opaque. Don't allow opacity in almost 100-year-old rules to enable you to go after entities. Make the rules clear, allow the entities to operate cleanly, look after them. That's it. And make it fair. So whatever I have to do, if I do something and a bank CEO does something, why should I have to go to jail and a bank CEO does nothing? When we did the same thing, where the only difference is the bank CEO's affects 4,000 times more people than mine. Now, there's a reason for that, of course. I don't want to get into it. But in order for us to control the blockchain space, like we control the internet space, you have to have more equality, more egalitarianism, more pure capitalism, more democracy. And I don't see that right now. But I'm biased because I'm an operator and I was at the receiving end of the business. So I'm biased.
No, I understand. Well, for me, even though you're biased, I mean, you're still pretty objective to say that you're still for regulation to me. I mean, it does not show that much bias. My thoughts are I'm against regulation. I'm for self-regulation, but I guess I'm against traditional regulation because of what you just said. Because it's not, to me, it's not fair and equal. It will never be fair and equal. And that's, I mean, if I'm Jamie Dimon of, JP Morgan Chase CEO, I know I am paying people to go to Capitol Hill to lobby for me. Like, I am paying for lobbyists. I am paying for people to get elected. It shouldn't be. If I'm Jamie Dimon, hell no, it better not be equal with King and Jamie Dimon. It better not be equal with Richard Hart and Jamie Dimon, or Reggie Middleton and Jamie Dimon. No, I'm exalting all my resources to ensure this will not be a fair and equal market. And somebody wants to win an election, they're going to help me with that. That's the way I'm thinking. So that's why I just say I'm not for regulation. I don't think it'll ever be fair when right now we're trying to switch an entire global currency to crypto when the power players' money is in fiat. It just doesn't make sense for it to be fair to me. But I do understand also why maybe you had to toe the party line a little more than I do.
Trust me, if I could speak freely, it's to be a different conversation. But
all good, I understand.
So,
I definitely understand. So as far as what you're working on now, you got the Boom Bust blog, and you still are working Veritaseum. I've seen people in the chat saying, hey, it's getting bigger than ever overseas now. So yeah, tell us what you're working on, where to look for you at, and some of the things we should be paying attention to.
I'm just about 100% on the IP development. Like I said again, I'll repeat again, I believe I own the DeFi space. And DeFi is significant. The possibilities haven't been touched yet because most DeFi is actually very, very elementary, simplistic. Things like Uniswap, you take capital, you bang it against a smart contract, and you get, capital back. There's so much more that can be done there. And the guys are doing a good job. If I'm not mistaken, the guy that founded Uniswap is from Brooklyn, lives in Brooklyn, almost walking distance from me. So Joseph Lubin, et cetera. So there's a strong founders concentration there. And I'm looking at how it's developing. Version 3 of the Uniswap contract shows like they put a lot of thought into it, which is interesting because almost all the other projects are clones of Uniswap. And Uniswap appears to be a clone of Bancor. Okay, so there doesn't really seem to be a lot of original independent thought. So think about that, and then think about the original clone, the original idea infringing upon our IP. If the original idea infringes upon our IP, then all their children do. Same thing with, say, Ripple. If Ripple were to infringe on our IP, then all 400 of those banks infringe if they use the Ripple code. And I'm not saying any of these companies do, I'm giving you hypotheticals.
No, I understand for sure.
Yeah. And that is the danger of trying to get to market quickly versus come up with a original idea. And I understand that. But if you just copy what everybody else did and make tweaks, if there's something wrong or faulty, or that you haven't seen in that original idea, your entire business platform or model now has an additional tax it has to pay, such as the IP licenses for IP that you never developed, someone else developed, you're using illegally or without consent. Let's put it that way, and I say illegally. So I'm not a lawyer, it's not called a law, but.
The years 2010, 2011, you're hearing about Bitcoin and crypto for the first time. Do you enter the market again, or do you say, a little bit too much going on over there for me, I'm gonna sit at the sideline on this one?
Well, I would always keep a little Bitcoin, you never know. Now it's different. But
I mean, what you know now with the whole Veritaseum, Bitcoin ups and downs, like through everything, would you still enter this same market?
If it was 2010 or if it's this market?
No, so if it was 2010 and it was all coming.
Because who wouldn't want that $200 to $30,000 bump, right? So, but I would not do anything differently from a strategic perspective. I probably would have definitely left the US. I now see doing business in the US is just a non-starter. If you're not part of the club, you're not going to survive in the US, from my perspective.
Right.
I'm not part of that club. I mean, I'm a creative guy. I think I'm a smart guy, but I'm not a guy that's part of the club. Okay. This is where I have a newfound appreciation for patent law, because even though you may not be part of the club, you own the clubhouse, then it's a forced discussion. Okay. So I will still put most of my resources in creating the infrastructure. I want to create the Amazon on top of the internet. So I'll create the Veritaseum on top of the blockchain technology, but I would domicile it out of the US. You know, there was no way that I could have known how hostile the US would have been to these new ideas. Now I do.
I would say, even from my own perspective, that's what now looking forward when it comes to DeFi and all this other stuff in the space, and people say, well, this is going to be the next thing. And I am more realistic now because I entered this space very optimistic, saying, oh my God, new technology. I'm looking at the white paper, I'm reading everything. This all makes sense. I learned to code a little bit. So I'm reading like the code. I'm like, all right, this makes sense. These projects work, X, Y, and Z. But one thing I didn't really, I guess it would happen. I remember I guessed after 2017, I said 2018 is going to be a year of regulation. I didn't understand how hard they would actually come down. So seeing how draconian some of the laws have been, you talk about New York, you only got 13, 14-bit licenses out there, how many years? When you start looking at some of these actual facts and numbers on these things, my optimism literally went away. So now when I'm looking at a DeFi space, NFT space, and everybody's like, oh, this is going to happen next, that's that. I'm like, no, what's going to happen is these regulators are about to get their hands around it and be like, all right, before we start divvying up this money in this pie, we're going to need to get ours over here, and y'all can figure out what y'all going to do with this little bit left. So I just say that because I definitely look at it differently as well, especially here in the United States, seeing it. Again, I entered the space in 2016. So seeing it in 2016, still relatively quiet, Bitcoin at $400, people still hanging up the phone on me, still getting talked about, like dude doing some weird stuff all of a sudden, to it being now, again, I came in super optimistic. And now I'm just like, it's not going to be, nothing's an easy road. I understand that now.
Yeah, it's all good. The real meat's going to be institutional finance. And then as it progresses, it's going to go to non-financial corporations. So the Fortune 5, the Fortune 2000. Okay, so the next big boom is going to be Wall Street. That means it's going to be all private keys. This small contract, anonymous user and all that, that's not going to happen. Okay, the government's not going to lie, and they've said it. It's not like they've been quiet about it. They've been very clear, so you disbelieve them, but that's like saying if the dog is growling and barking at you, you're not going to bite me. And when the guy lets the dog off the leash, you get bit and you're shocked. There's nothing to be surprised about. They were very clear on what the intentions are. So regulation, FinCEN, AML, KYC, then you're going to have the big institutions move in, and they're going to centralize this decentralized platform, because if you decentralize it too much, you kill their business model, right? The banker's business model is gatekeeper, centralization. After that, you're going to have the non-financial corporates come in, and it's going to spread, become more ubiquitous. And then you're going to have the retail users come in. And then you're talking trillions and trillions of dollars of activity daily.
What year are we looking at? What year is this going to happen? What year do the Bitcoiners finally capitulate the entire financial market?
Okay, well, I understand you're all a Bitcoin maximalists, but Bitcoin is not even part of this discussion.
Oh,
okay? You're not part of the discussion.
Call 911.
No. Bitcoin has lost its way when it decided not to use a full Turing scripting language and not to continue a fast-paced development. Bitcoin's development has moved at a snail's pace. I got into it in 2013, okay? The code in 2013 is not significantly different from the code in 2021. You said they're turning Taproot off, right? When was Taproot first written?
It's been a while.
Okay.
Yeah.
I turned stuff on right after the code audit. The code audit is being written as it's being beta tested in public. Now, they have to move a little slower, but here they have a child of Bitcoin, Ethereum, and Ethereum is going to version 2.0. It's going to version 2.0. Bitcoin is still in beta, if I'm not mistaken. A fake beta, because it's been running so long.
Well, Bitcoin wasn't the same after Segway. Once Segway happened, that was a whole new Bitcoin in itself,
Yeah.
So I do understand what you're saying. Okay. That's a lot to take in. We definitely have to have you back on the show whenever you're free. Reggie, I appreciate you coming on and being so open and upfront with us. I know it's some stuff you can't talk about. For those who are interested, you can go to that Veritaseum Telegram group. Like you said, it's still open. It's still up and running. You go ask your questions.
Now, there too, I want to be clear. Veritaseum official. If it doesn't have 2,700 members, that's the wrong one. So Veritaseum official on Telegram. And I'm going to need some help because I'm pretty sure the Hexicans are going to destroy my Twitter feed again. So anybody who wants to have an objective conversation, and not call me names, at Reggie Middleton or at Veritaseum Inc. Join the Twitter conversation. Just be polite, okay? Be fair, be professional. Don't need to agree with me, but you know, we're not there to fight, okay?
Yeah, to reiterate that, come on, people. Like you said, be polite, be professional, be fair. It's not hard to disagree with someone and just disagree with them, but still get your point and your messaging across. I think that's something we need more in the space, because even when I invited Richard on, the initial Twitter feeds until I started like commenting were like, oh, this is going to be good. Like they're going to be going at it. And I'm like, I don't know what, like, I get it. You all are on the internet a lot. Like
how
the
you
world,
roll, right? Yeah.
Right. That's might be your world, but in my actual real world, if I have that type of energy for someone, it doesn't end on the positive note. So I don't have that energy for people. Like I want to have conversations. I want to have debates. I want to ask tough questions. Like I said, to me, this is my version of self-regulation. It's like, get someone on the show, ask some questions, and have them speak whatever their truth is. And then at home, myself and all our viewers will do our own research and come to our own conclusions and make our own investment or trading or whatever decisions that involves. But at least everyone has their chance to say whatever they're going to say. So that's the important part to me for sure.
Okay.
All right.
Good
Again,
advice.
yeah, thanks, Reggie, again for coming on. Reggie Middleton, folks, Veritaseum, boombustblog.com as well. And of course, as you just mentioned, where you can find them on those Twitter handles and Telegrams. Again, Reggie, thanks for being here. And if any last message, last thing you want to do, take us out.
Everybody be positive, be happy. You're at the beginning of the greatest paradigm shift, I think, since the discovery of electricity. If that's not the case, then definitely the discovery, the implementation of the internet. It's just that the blockchain or the crypto paradigm is severely misunderstood. You know, this is egalitarian access to value. The cornerstone of power is forging value. Okay, now that you can actually move value effortlessly across without a middleman, the world will change if this is implemented properly. Most of the power structure is going to fear this change because they don't understand it, and they're going to fight it. Once you get one of the power players, a big power player that understands it, they're going to back it and push it. And then you're going to see real things happen. You know, that 90-year-old girl in Sri Lanka who understands her crop better than all the commodity traders in Goldman is going to be able to compete with them and potentially defeat them. Watch out for 90-year-old girls in Sri Lanka. Don't sleep. Okay?
Antonio, clip that. I love it. 9-year-old girls in Sri Lanka will be able to compete with banks one day. I believe in that, and I fully agree. Reggie Middleton, thank you again for being on the stream. Truly appreciate it.